welcome to PriceTarget Research. I'm John Lafferty. Our research briefs are short discussions of topics of investment interest, including our current ratings on stocks of interest, key analytical questions and techniques, and important alerts and events. So let's get started. In this research brief, we'll be taking a look at some key investment characteristics of one of the largest companies in the world, Apple Inc. Apple's businesses span a variety of areas, including mobile communications and media devices, importantly the iPhone, personal computers, software, services, peripherals, third-party digital content, and almost 500 retail outlets worldwide. The biggest investor worry that the company confronts at this moment is whether it's lost its innovative edge and is now too big to grow at a very rapid rate. As an illustration, Apple's current annual revenue of just under $240 billion is $235 billion, about 40 times higher than it was at the time of the introduction of the iPod. Before we look at in more detail at Apple, let's review an important research tool used throughout PriceTarget Research analyses, the quartile performance chart. The light blue bar shows the range of performance for a group of companies. The top end of the bar is the upper quartile performance, meaning a quarter of the companies do better than that level. The line in the middle is the median, meaning that 50% of the companies do better than that, 50% do less well. And the bottom end of the bar is the 25th percentile. 25% of the companies are at or below that level of performance. Finally, the red diamond reflects the performance of the company that we are focusing on at a point in time. And you can see in this example that this company was comfortably into the upper quartile on this variable at this point in time. Company's investment profile is always a good way, a starting point to begin to get a handle on its investment attraction. These are investment characteristics for Apple as the red diamond compared to the S&P 500, which is the blue bars. There's 12 factors that help define a company's investment personality. They're organized into 4 groups: valuation, growth, profitability, and risk. Our focus is always on where a company is upper or lower quartile, because those are the factors that give it its hard edge. So if we look at Apple, we're going to see here that there are 6 factors where it's either upper or lower quartile. The PE ratio is quite low. Interestingly, investor expectations for Apple do not appear to be very high, which is kind of interesting given its prominence and recent success. But its ability to grow is in question, and it looks like that's reflected in the stock price. You'll notice that its profitability is stupendous, both on a historical and a forecasted basis. 35% returns on equity are almost unique, especially for a company of its size. Its stock price volatility is high, surprisingly, 26% more volatile than the S&P 500. It is impervious with financial strength. PriceTarget Research has a financial strength rating scaled from 0 to 100. Apple is at the top of the heap. Unusually strong finances and quality. And finally, its market cap is stupendous, so high that on this chart it's very hard to see the S&P quartile levels. And as I said, notice that growth for Apple is neither a strength or a weakness. It's kind of middle of the pack. Let's look at profitability in a little more detail. These are various measures of profitability. Here we're comparing Apple to its peer group. You'll notice its pre-tax margin is upper quartile versus the peer group, as is its pre-tax return on capital, as is its return on equity. Again, 35% level of return on equity has been maintained. It is expected to be sustained going forward. This is really remarkable when you think that the company has sustained this level of profitability while its revenue went from $6 billion a year annually to $55 billion a quarter. Now, growth is a different story. There's 4 measures of growth here: revenue, assets, earnings, and common equity. We've put them on a share basis to adjust for acquisitions, share buybacks, and so on. And you can see that on all four measures, historically, the growth has been stupendous, 30% plus. But we're starting to pick up some erosion in the growth rate. For instance, earnings per share over the last 5 or 6 years has tailed off significantly. It's under 10%. Same thing with common equity at 7%. And we're starting to see some plateauing of revenue and assets. And as I mentioned earlier, one of the key issues for this company is how fast will it grow in the future. We've plotted the consensus growth rate forecast for Apple. In other words, the average of the growth rate forecasts of all the analysts on Wall Street who follow the company, along with our own PriceTarget Research growth rate forecast, significant deterioration versus these historical rates of growth. So net, what's the current outlook for Apple stock? Apple has an appreciation score of 72. Which reflects the appreciation from the current price just under 160 out to our estimate of warranted value a year out of 230. That appreciation potential is better than 72% of stocks in our 6,000 company database. It also has a timeliness rank, the power rating of 88. This reflects what's happening to earnings estimates for Apple, its stock price behavior, what's going on with its peer group, and it's more attractive at the moment than 88% of the companies in the database. Those two factors taken together yield our value trend rating. You'll see the value trend rating went to B at the end of 2016 with the stock around 115, and it is currently A. Apple has our highest rating. It's a clear purchase candidate for investors whose investment objectives match up well with its investment profile. So in summary, Apple's investment profile, slowing growth, but very superior profitability, low risk. Its wealth creation has been stupendous. It's plateauing, but it's still above average. While its earnings and book value growth are slowing significantly, the high appreciation potential and the low PE mean that the slowing growth is more than reflected in the current stock price. So in summary, Apple retains our highest rating of A, very attractive for purchase. Well, that's it for this research brief. Until next time, you can follow us on the web at PriceTargetResearch.com, where you'll find comprehensive, timely research and ratings, weekly updates covering thousands of companies. See you on the next research brief.